Obviously, this has been in the news this year. There's a lot of discussion because of the big dramatic change with the child tax credit. Prior to this, prior to 2021, we always had these 7 requirements to determine if somebody was eligible to receive the child tax credit. These 7 requirements are age, the relationship, the support, dependency, whether or not you meet the dependency test. There was a citizenship test, there's a residency test, and then there's this filing status. The child can't file their own tax return except to claim refunds. They can't be claimed as their own dependent. They can't claim themselves. So these were all things that historically we've done. And going forward, most of those things remain the same. However, 2 of them have been changed. The age requirement has been changed and the residency requirement. So let's move into, we'll discuss both of these. Going forward in going into 2021, the first big thing about the age is now that it used to be that a child had to be under age 17 in order to claim the child tax credit. But now in 2021, a child age 17 is eligible for the credit. I don't know if any folks here have had children, but we all know that when a child goes from 16 to 17, they become so much less expensive for us to raise and everything, which of course is not the case. But we are now situated. Now the situation is those children that are 17 will be eligible for the credit. The next big change that's occurred here with regarding the eligibility is the credit itself has been extended to the residents of Puerto Rico and the U.S. territories. And I'm going to touch on that in a few minutes because this is a major change for taxpayers that live in the territories. The next thing that is a big change, and it's a very dramatic change for the child tax credit, is in order to get the credit, you no longer have to have any income. You don't have to have earned income or any income to qualify for the child tax credit. All you need is an eligible child. So we will have taxpayers with no income claiming the credit for children, and they will be eligible to receive the credit. Okay, the next thing that's different with the child tax credit is the amounts. This is the child tax credit amounts are significantly larger than in prior years. Previously, since the Tax Cuts and Jobs Act came into effect a couple of years ago, the child tax credit has been $2,000. And of that $2,000, $1,400 of it was refundable. But in order to get that $1,400 in refundable child tax credit, you had to have earned income, and the amount of the refundable credit was 15% of the amount over $2,500. That's all gone away. Now the entire child tax credit is considered refundable. And the amount of the credit is $3,600 if the child is under age 6 and $3,000 for a child that is age 6 to 17. All right, let's take a look at how this is going to, how the differences are. This is the child tax credit in 2020. So the amount before all of this changed, it was $2,000 and $1,400 of it was refundable. It started to phase out when a taxpayer adjusted gross income exceeded $400,000 for a married filing joint return or $200,000 for all other filing statuses. And it would phase out at the rate of 5% for each $1,000 of income. So basically every $1,000 that a taxpayer made, they would lose $50 worth of the credit until it was all gone. And then the refundable part was you had to have earned income in excess of $2,500, and the refundable amount was 15% of the excess over $2,500. Now in 2021, after the American Rescue Plan, the amounts have been increased dramatically. They've gone to $3,600 for children under 6, $3,000 for children 6 to 17. That is now totally refundable, and there is no earned income requirement. As far as the phase out, there is a two-part phase out. The first part will phase out once the taxpayer's income hits these thresholds: $150,000 for married filing joint, $112,500 for head of household, and $75,000 for all other filing statuses. In this situation, though, it will be reduced by 5% for each $1,000 in income, again, $50, until the credit goes down to the old amount of $2,000. And then it will stay at that $2,000 amount until we get to the second threshold. So once, a taxpayer, once it starts to reduce, it will only reduce down to $2,000 until they get to the income, which is exactly the same as it was before. And so this is how it will all flow. All right. The other big thing about the child tax credits this year is that there's been advances. Taxpayers have had the ability to get part of the child tax credit in advance. These advance payments started in July, on July 15th, and they have basically been on the 15th of the month since then through December. December 15th will be the last payments. These payments are all based on the 2020 tax return, unless there has been no 2020 tax return filed, and then it would be based on 2019 if that return had been filed. And the payment amounts are $300 for the younger children and $250 per month. And taxpayers have had the opportunity to opt in or out of this. If they can add information on a portal that the IRS has set up online, or they can opt out of it. What happens though? What's going to happen with this? Unlike the recovery rebate credit, though, we have to reconcile these payments. We will be reconciling all of the payments on Schedule 8812, which is the child tax credit schedule that we're used to filing. And if we are entitled to more credit, then we will get that credit, the excess credit will be allowed, and we will receive that as a refundable credit on the tax return. If we've gotten too much credit, and how could we get too much credit? Well, if we don't claim the child on the tax return, but we receive the advance payments, we will have excess advance payments, and we may be subject to repayment. And this is how repayment is going to work. If you will have full repayment relief if the taxpayer's AGI is at or below these thresholds. So for example, if my taxpayer makes $50,000 or less, files as head of household, but does not claim the same children that they received the advances for, they will not have to repay anything. For example, you could have a single filer. Let's say it's a parent who claimed the child in 2020, but they're separated. You have separated parents, and one parent claimed the child in 2020 and received the advanced payments. They do not claim that same child in 2021. All right, this parent then would be subject to repayment requirements. But if their income is below these thresholds, it'll be forgiven and they will not have to pay anything back. If their income, though, is over the floor threshold and between these amounts, they then will get partial relief, and it's prorated. It's basically, they go from full relief to get partial relief up until they hit the top of these thresholds. And once they get to the top of these thresholds, they have to repay the entire amount of excess that they receive.